Good afternoon and thank you for joining us. Well, November was a tough month for the stock market. The Dow Jones Industrial Average was positive by less than 0.5%, but both the S&P 500 and the NASDAQ finished the month in the red. The NASDAQ snapped a 7-month winning streak. Most of the damage was done mid-month, with all three indices falling between 4 and 5%. The downturn was driven by concerns over the sustainability of the AI trade momentum. Those concerns were manifested by a rotation out of tech in November and into more defensive sectors. Healthcare, energy, consumer staples, financials, real estate, and utility ETFs all outperformed the major averages. Bitcoin was a big loser in November, down 19%. Bitcoin has fallen sharply since October 12th, down 27% by month end. Despite the many negative consumer sentiment reports, the consumer is still spending. Holiday sales are expected to be over $250 million. Black Friday retail sales led e-commerce stocks higher. Amazon, Target, and Walmart are the big winners so far, but even department stores Macy's and Kohl's saw gains. And apparel brands Abercrombie & Fitch and Victoria's Secret were up 3% last Friday. Fortunately, all three averages rebounded toward the end of the month in anticipation of a Fed rate cut in December and the damn the debt and deficit mentality in Washington. We do not think for a moment the AI revolution is in danger. One example is Alphabet. Their stock was up 13% in November and beat every one of the Magnificent Seven stocks. The market thinks their Gemini AI product and chips called TPUs will compete against ChatGPT and even NVIDIA. And let's point out that the 2026 market forecasts are very positive. At the high end, Deutsche Bank has set an 8,000 target for the S&P 500. HSBC and JP Morgan expect the index to rise to 7,500. Another example that a bull market climbs a wall of worry. Thank you for joining us. We hope to see you next month.